I think the risk of a crash is much, much higher than what the public perceives. And I just like to say this, at the present time, we have statistics about this. People are gambling in options like there is no tomorrow. They're buying stocks like there is no tomorrow. In consumer confidence figures, one of the indices is the expectations of stock prices in 12 months. It's at the highest level ever. And while the public is buying in its complacency and in the absence of considering the risks, given the high valuations, one of the, say, more successful investors over the last 50, 100 years, Warren Buffett, has increased his cash position. Now you have to think this philosophically. The public is piling in, and a proven smart or intelligent investor, with lots of knowledge because of the good contacts he has with the government and so forth, he is selling. So the masses are buying and the smart man is selling. Tells you something about the market position. I mean, let's stick to the reality. Affordability of home buyers at the present time is at the lowest in history. You can measure how affordability by comparing the price of a house to your income, or to the typical income in America, or the average income, or the median income, and so forth. And you can also measure the standards of people according to consumer confidence, and you can also measure it according to essentially how many people are free. I consider someone not to be free that needs to collect his paycheck at the end of the month to pay his bills. He's a slave. He collects his salary and right away has to pay the interest on the existing debts he's got, and the expenditures for his house or for his apartment or for his car, whatever. And that ratio of people who live paycheck to paycheck is now at the highest level in the history in America. And so when American economists come and tell me how the great consumer or the consumer is in such a great shape, this is all nonsense. The asset holders are in a great shape, including myself. I'm also asset holders. I benefit from money printing, but I'm also an economist and a social observer, and as such, I must condemn money printing. It's a very evil way to impoverish the majority of a population. But Wall Street, the economists in Wall Street, they all paid, and they're all also bribing the Fed and are consultants to the Fed. So you will never hear this criticism by Wall Street economists. Wall Street economists, they want to understate the rate of inflation so they can keep on printing money. With money printing, the asset values of portfolios and of all kinds of assets go up, and the fees that Wall Street collects from all these assets goes up as well. So Wall Street and the Fed are in a symbiotic relationship that benefit both. And the government as well, because the government can issue bonds at artificially low interest rates. But the public will never be informed about this because the media keeps quiet. I was in interviews in New York with all the major media outlets. I told the journalists when they told me, oh, the rate of inflation is 1-2% and so forth, I said, I want to ask you, by how much is your cost of living going up every year in New York? they all were silent. They didn't dare to tell me that their cost of living was going up at something like 10% per annum. I see two economies. I see the economy of the wealthy people and the asset holders who have benefited from essentially more than 40 years bull market in asset prices, with stocks and bonds going up, real estate going up, everything going up after 1980, 82, when stocks and bonds bottomed out. And we had this period of disinflation and the opening of China and the breakdown of the communist ideology around the world, which lifted the standards of living of, say, 3 billion people. And then we have the economy of ordinary people in the Western world, whose standards of living, by and large, has gone down. As I said, I distinguish between the economy of the very wealthy people, the 0.1% or 0.01% that benefit from asset inflation, and then the economy of the non-asset holders, the workers, whose benefit is much less or negligent or non-existent when asset prices go up, because they don't have any assets, but they have debts. And these standards of living have been hurt, particularly after the bottoming out of interest rates in year 2020, when the 10 years US Treasury was at less than 0.6%. From there on, interest rates went up, and the young generation and many people who had borrowed money in the belief that interest rates would never go up, they got hurt very badly when interest rates went on their, say, mortgages from 2% to 6% or 5%. So okay. This is what I'm seeing. Yes, I think in the Western world, we have an institutionalized poverty. In other words, the government can hand out money to people, which they do. You know, we've moved very far to the left in Western society, and we subsidize a lot of people. We subsidize them through unemployment benefits, through long-term care and social security, and allowances for this and allowances for that and so forth. But what it leads to is essentially these people earning a bit more or having a bit more money. Then they go to Walmart and they spend it, and then the money is earned by the capitalists who own Walmart. And the ordinary people are still struggling. And now they have this brilliant idea to impose tariffs. It's an absurd idea because the tariffs will increase the prices of just about everything. And the employment gains will be very minimal, because companies will pay the tariffs rather than move production in the US, where there is not sufficient technological skills, nor are there enough people to do the jobs that, say, the Chinese or the Indians or the Vietnamese do. I see this as an issue. I believe that I have documentation that shows that the rate of cost of living increases in the US is much higher, and I repeat, much higher than what the government statistics suggest that are broadcasted and issued by the Bureau of Labor Statistics. The Bureau of Labor Statistics, in my opinion, is a fraudulent organization that understates the rate of inflation massively, not a little. Money to poor people, to essentially everyone, so that they could go and shop at Walmart, they could go and visit Disney, and they could go and buy ice creams from and food products from whoever makes them. The money then flowed all back. You know, this distribution, this redistribution of money is an illusion. I mean, I studied financial policy, fiscal policy, financial policy, and taxation, and also tariffs, because I wrote the thesis of my dissertation about the repeal of the Corn Laws in England in 1842. That was the great financial reform of Sir Robert Peel. He's known internationally as having invented essentially Scotland Yard, the peelers, they called them, the police force. But his major achievement was to bring England, the UK, from a system of protectionism that benefited few people, the wealthy class, into free trade, and he dismantled the Navigation Act, which were the prime example of protectionism. And so I'm reasonably familiar with tariffs and the impact of tariffs on society and on countries. I grew up in the 1950s, and I would say in the 50s we had a relatively healthy capitalism, but not perfect. There were also restrictions on trade and patents and so forth. But we've moved into an economy where governments think, or that the problem is market-oriented economies, such as Milton Friedman was, no longer exist. All the economies, one way or the other, are interventionists. They say this should be done, the government should do that, and so forth and so on. They're always interventions. I'm, of course, against any intervention. And not intervention also means that you have a capitalistic system. And I want to reiterate what I said for a long time and repeatedly. Capitalism involves pain. There are lots of people that go bankrupt in capitalism, and in capitalism you have recessions. Once you have a government that doesn't want to accept recessions, and each time the economy slows down, increases government spending and prints money, you avoid near-term pain, but you produce much more pain in the long run. And the recession, traditionally during recessions, unemployment went up, and then wages went down, and then employment picked up again. But now what happens is that nominally wages do not go down, but because of the money printing, the prices go up more than the wages. And so in real terms, inflation adjusted, the standards of living of people is going down. Anyway, I mean, if someone is interested about really capitalism and what society looks like in a capitalistic system,